Hey everyone, and welcome back to the channel. Today we're diving deep into the turbulence surrounding Ripple's XRP. The market is already on edge, and things just got a lot more interesting with a massive 92.6 million XRP transfer hitting Coinbase. We're going to break down what this means, look at the conflicting signals, and figure out if this is a sign of an impending crash or a massive buying opportunity in disguise. Stick around, because the data tells a fascinating story. Let's start with the big event, that huge 92.6 million XRP inflow to Coinbase. Now, when a massive amount of crypto moves onto an exchange, especially during a bearish market cycle like the one we're in, it usually sends alarm bells ringing. Why? Because large holders or whales typically move their assets to exchanges when they're getting ready to sell, hedge their positions, or just de-risk during volatile times. This sudden increase in supply can create a lot of downward pressure on the price. Think of it like this. The market is already nervous, and then suddenly a huge pile of XRP becomes available to be sold. This can easily spook traders, leading to panic selling and creating imbalances in the order books. If there aren't enough buyers ready to snap up this new supply, the price can take a nosedive pretty quickly. The key question here is the whale's intent. Is this a strategic move to reposition their assets, or are they genuinely about to dump everything on the market? The timing, right in the middle of a market crash, amplifies the uncertainty and makes the situation incredibly tense for XRP's short-term price. But here's where the plot thickens. While this massive inflow was happening, another crucial metric was telling a completely different story: XRP's exchange reserves. These are the total amount of XRP held across all exchanges. And guess what? They've been dropping. At the time of this analysis, reserves were down nearly 9%. This is significant because when tokens leave exchanges, it's usually a sign of accumulation. It means investors are moving their XRP into private wallets for long-term holding, not for immediate selling. This trend is a powerful counter-narrative to the whale transfer. It suggests that while one big player might be preparing to sell, many other investors are confidently buying the dip and securing their assets for the long haul. This reduction in available supply on exchanges naturally helps to stabilize the price and absorb some of the selling pressure. It shows a certain resilience in the market, where holders are resisting the urge to panic sell even when things look grim. So, we have this fascinating tug-of-war, a short-term supply shock from the whale versus a longer-term trend of supply reduction from accumulation. If this trend of declining reserves continues, it could provide a strong support foundation for XRP, even with the current turbulence. So, who is actually buying? To answer that, we need to look at a metric called the Spot Taker Buy Cumulative Volume Delta, or CVD. This is a fancy way of tracking whether buyers or sellers are being more aggressive in the market. A strong taker-buy CVD means that buyers are actively eating up the sell orders on the books, showing a clear and aggressive demand. And for XRP, the taker-buy dominance over the last 90 days has been remarkably strong. Even with the market crashing and volatility surging, buyers are still stepping in and accumulating XRP. This is the force that helps absorb sudden supply shocks, like that 92.6 million XRP transfer. It's like having a defensive line that's actively pushing back against the sellers. This sustained buying pressure is unusual during sharp crashes, as buyers often get scared and retreat to the sidelines. The fact that they're still engaged suggests there's real conviction behind the accumulation. However, this buyer stamina isn't infinite. If more large inflows happen, it could eventually overwhelm them. For now, this strong buyer dominance is a critical factor that's helping to soften the blow and could be the key to forming a solid price floor for XRP. Now, let's talk about valuation with the NVT ratio, which stands for Network Value to Transactions Ratio. Think of it as the crypto equivalent of the price-to-earnings ratio in stocks. It compares the market capitalization of a coin to the value of the transactions happening on its network. Recently, XRP's NVT ratio spiked by more than 11%. A high NVT ratio can sometimes be a warning sign. It suggests that the price, or market cap, is growing faster than the actual use of the network. During a market crash, a spike like this deserves extra attention. It could mean the price is overextended and at risk of a correction, especially if network activity continues to decline. A high price with low usage isn't a sustainable combination. However, there's another side to this. NVT can also remain high during periods of accumulation when long-term investors are buying and holding rather than transacting frequently. So this spike isn't a direct bearish signal, but more of a caution flag. We need to watch if transaction volume picks up to justify the current price level, or if the NVT continues to climb into what could be considered a risk zone. Finally, let's look at the derivatives market, specifically open interest. Open interest represents the total number of outstanding futures or options contracts that haven't been settled. For XRP, open interest recently fell by over 13%. This sharp drop means that a lot of leverage positions, both bullish and bearish, have been closed out. As volatility spikes, traders are rushing to reduce their risk exposure. Now, a decline in open interest can actually be a good thing for stability. With less leverage in the market, there's a lower chance of cascading liquidations, which are what cause those extreme violent price swings. It creates a calmer, less volatile environment. The downside is that it also removes some of the speculative fuel from the market, which can limit strong directional price moves. This deleveraging shows that traders are in a wait-and-see mode, preferring safety until the market shows a clear direction. A continued drop in open interest would suggest caution will dominate, while a sudden rebound could signal that confidence is returning and a new trend is about to begin. So, to wrap it all up, XRP is at a fascinating and critical crossroads. On one hand, you have the bearish pressure from that massive 92.6 million XRP inflow to Coinbase, which screams potential sell-off. On the other hand, you have several bullish countersignals. Exchange reserves are falling, indicating strong long-term accumulation. Take-or-buy dominance is high, showing that buyers are aggressively absorbing supply. And the derivatives market is de-risking, which could lead to more price stability. This creates a complex and mixed picture. The market is trying to digest this sudden supply shock during an already intense crash. While the short-term risk is undeniable, the underlying strength from long-term holders and aggressive buyers provides a solid cushion. XRP's next major move will depend entirely on which of these forces wins out. Will the whale's potential sell-off trigger a deeper slide, or will the resilient buyers and long-term accumulators hold the line and set the stage for a recovery? It's a battle between short-term fear and long-term conviction. What do you guys think? Is this a moment of maximum fear and a great buying opportunity, or is it a warning to stay away? Let me know your thoughts in the comments below. Thanks so much for watching. If you got value from this breakdown, make sure to hit that like button and subscribe for more deep dives into the crypto market. Stay safe out there, and I'll see you in the next video.